So this is not a small business by any stretch of the imagination. In one quarter, they brought in $17.6 billion in revenue and over $11 billion of free cash flow. Their cloud revenue has grown 11% over the last 12 months. What's going on, money lovers? Welcome back. The moment we've all been waiting for is finally here. Tomorrow's the day. IBM is set to spin off the portion of its business that will become Kyndryl, a separate company. We're going to talk all about that today. Take a look at their recent quarterly earnings report and why I remain optimistic about this company, even though they have missed out on what is arguably the biggest bull decade for the stock market and especially for tech. IBM as a stock has not really done much the last decade, but we're going to talk about why I remain optimistic. Let's get right into it. If you enjoyed the video today, please don't forget to like, subscribe, and drop me a comment below. So the Kyndryl shares will be distributed to IBM stockholders after market close on November 3rd. So tomorrow, Wednesday, you'll be getting your Kyndryl shares if you own IBM. Once distributed, each IBM stockholder will receive 1 share of Kyndryl for every 5 shares of IBM that you own that were held as of October 25th. IBM plans to exchange 20% of the shares of Kyndryl stock for IBM debt during the 12-month period following the distribution. So that's great to see. They'll pay down some of that debt, and we'll take a look at their balance sheet in a minute. After the spinoff, IBM will focus on cloud software, hybrid cloud, artificial intelligence, and other technology opportunities, one of which is quantum computing, which I'm excited about, while Kyndryl will focus on services to design, run, and modernize customer technology environments. So Kyndryl will already have plenty of business. The Kyndryl segment of the business will already have 4,000 customers and more than 100 companies, and it generated revenue of almost $20 billion in 2020, and they estimate that its current addressable market is about $415 billion, expected to grow by 7% annually. One of the big fears has been the Kyndryl segment of the business. You're better off selling it immediately because it's a dying business. It's more of the legacy type businesses. But if it does continue to grow 7% annually, it might be worth holding on to. And as people have asked me, I do plan to hold my IBM and Kyndryl shares for the time being. And if that were to change, I would let you guys know on the channel here. So don't forget to subscribe. Now, these numbers don't necessarily reflect how Kyndryl will perform once it's a standalone company. Definitely could be harder to get that business. Now, IBM will be smaller but have higher margin. And this is very important because IBM has not really been growing much. In fact, revenue has been declining, but now they're able to focus on these high margin businesses that are growing the fastest. So IBM's revenue will be smaller because they are losing a significant chunk of the business here, but they're going to be focusing on the business segments that have the highest profit margins and also have the biggest growth opportunities. Obviously, cloud, AI, these are industries of the future. So it'll be interesting to see how this plays out, but I think that IBM, the new IBM company, will be poised for some growth here finally. It'll be interesting. Kyndryl is something we'll have to keep an eye on and see how it's going, if it does grow at that 7% rate or if it does stagnate or even decline as many people have predicted. So next I want to just get to the IBM Q3 earnings report, which I think can shed a lot of light on some of the positives here and what you can expect moving forward. So this is not a small business by any stretch of the imagination. In one quarter, they brought in $17.6 billion in revenue and over $11 billion of free cash flow. Their cloud revenue has grown 11% over the last 12 months. So moving forward, if IBM can really now put their full focus on the cloud, on things like cloud and AI, they should have no problem maintaining double-digit growth, and hopefully we see even higher rates of growth. Now, maybe they can get it up to 20%. I think that it'll be a lot easier when that's more so their sole focus moving forward here. And this is a great company because it'll give you that cash flow and growth at the same time. They put $6.5 billion into R&D. They're growing the business. They have a strong cash position, over $8.4 billion in cash. They reduced their debt by $7 billion. So lots of positives. And another thing that I think people need to think about too is, it's very rare that a company goes bankrupt. They really have to royally screw up for a company to cease to exist and go bankrupt. And as a technology company, they have a much easier time, I think, adapting. And, IBM will reinvent itself. I think this company will pan out just fine. It's definitely a long-term play here. And, the stock did go down significantly after their last earnings report, which was disappointing to many, from around $141 to where it sits now at $125. So if you believe in this company, this is definitely a great buying opportunity. I have not bought any more shares since this dip here, but it could be a good buying opportunity. I just have been putting my money toward other companies that I want to scale my positions up in, like Voyager Digital, things like Palantir, which have been much more exciting in the short term. There's no denying. But I think IBM long-term will do fine here. And so year over year, their cloud and cognitive software segment actually grew 20%. And then if we just look here, Their total revenue was flat year over year, 17.6 billion, but the cloud is up pretty significantly, 12%. I think we'll see those numbers increase even more. Now, I think IBM is in much better hands now with this man, Arvind Krishna, who is an engineer at heart. He's worked for IBM. He's got a long career in IBM that we've covered on the channel. Check out our previous videos in IBM for some background on him, but this is the guy who is the main proponent behind the Red Hat acquisition, which really is what kept IBM, alive and giving them that growth that we've seen the last couple of years. And prior to Arvind being CEO, this company was just mismanaged. It was led by MBAs who were too concerned on short-term profits, not enough on innovating. And that's what happened. So IBM stagnated the last decade, but I am excited to see where Arvind can take this company. He's been compared to Satya Nadella, the CEO of Microsoft, who really turned that company around. So I am excited to see what happens here, and I think he's doing a great job so far. It's not going to be an overnight thing, but now that with the spinoff, this should help, and I think IBM gets back to being a growth story. So let me know what you think in the comments below. If you enjoyed the video, please don't forget to like, subscribe. This is Vinny from the Investment Club, and I'll see you next time.